All right, so let me make a couple comments to his presentation. The first one, he said that foreign students aren't entering colleges as much as they were in the past. Something like, right? I'm excited to say I had to look over at Tony Vicini. Wichita State's foreign students are actually increasing this academic year, correct? Yeah, no? Oh, maybe I got it wrong. Uh-oh. I looked at him thinking, is that right? Okay, maybe I was wrong. I thought that was a good news. Maybe it wasn't. But foreign students have always been a big part of our university. Anyway, the other comment I heard him say is talking about oil staying around that $45. And unfortunately, that's actually not the best news for Kansas and what price ranges that we need for production of oil. So that's actually not necessarily the most optimistic news for us. Oh, overall, he had this comment about a worldwide global synchronization of an expansion, right? Or something like that. That's a positive message, isn't it? Right? That sounds really good. Not only we're growing now, there are some hiccups to it, but there is growth globally. So if you think about that as the backdrop of our economy, when you start looking at this number here, and this is unemployment, not on the output side, you have to ask yourself, what is going on if the U.S. is growing? The Plains region, a region that we are actually very similar to, but we don't like to compare ourselves to, is growing. What is explaining our employment issue right here? Why is employment flat or slightly declining in Kansas? Right? There are some questions that we need to ask. Is our economy stalling out? Are we going into recession? And there's been a few times this last year I thought this might be happening in the state economy. So we need to go and explain this a little further. That last graph, I should explain. That the last graph shows employment from one point in time to today. And when you look at that employment, Kansas has only grown 3% over that 10-year period, and the U.S. economy grew closer to 6% during that period. When you break down why, and within the employment numbers compared to the Plains region, it's pretty obvious two sectors come up. The first one's durable goods, and it's actually not all of durable goods. Most of durable goods, the fabricated metals, machinery, looks exactly like the Plains region. It's one sector, and that's aerospace. And we have to rethink about this every once in a while. We have to retell ourselves there's a difference between just cyclical changes where economies go down, they come back up. Aerospace went through a structural change, and that's something we can't necessarily control. And that's part of the reason why we have not grown as fast. And that's one of the fundamental drivers to our economy, and we couldn't really beat ourselves up too much. The other one is government, and we all in this state know exactly what we've done in government. We've cut a lot of those jobs, and that has affected us. Now, if we look at the employment change in both the Plains region, you apply it to our state, that actually explains most of the growth loss that we did not experience compared to the Plains. The rest of it can be explained by the spillover effect from those jobs. All right, so where does this put us now? What's going on in our economy today? And I showed a slide just like this about a year ago. And if you recall, a year ago, that black line was negative during the summer. And I said, hold on, wait up. I don't think that we're actually declining in the state economy in summer 2016. I said, their numbers are going to be revised up. And I gave you a little bit more optimistic outlook last year about what was going on and the current conditions. They were revised up, I'm happy to say, but today I'm looking at the exact same repeat as last year, where employment numbers are negative again going over the summer. And today I don't have that same optimistic point of view I did last year. I think there's some further concerns with what's going on in our Kansas economy, and one of them is over here on this slide. It's in the labor force. You talked about labor force at the national level. We have even deeper issues within labor force. One of it is population. The population estimate came out as almost essentially zero in 2016. When you take the breakup of that, you see it's mostly a net migration, people moving in and out for jobs. Now, if I were to characterize this, I think Kansas population growth has a lot to do with cats. I'm serious, it has a lot to do with cats. If you think about it, Kansas is good at fertility, cats are good at fertility. There's natural deaths, and cats sometimes get ran over by trucks. People are very finicky, right? If there's a better can of tuna or Friskies in this neighboring state, better job opportunity, they're going to get up and go move. And I think that's a lot what has happened, right? People in a small state like this are looking, those millennials trying to move up in their career, can't necessarily stay in the same industry here. They have to go to the next state over to continue their career pattern, right? So let me break this down even further. This is the 18 to 64-year-olds, net migration, right? This shows that the people in that core working age population has been leaving the state, right? If they go up and leave the state, go back to this cat reference, just think of a cat going up and leaving. Not only their kittens are going with them now, but their future kittens are going. So not only this is slowing down our current expectations of our economy, this is going to slow down my expectations for the Kansas economy going forward into the future. That longer term forecast is being reduced because of that labor supply issue within the state. Now, is there room for optimism? And yes, well, mostly. There's some, when you look at optimism here, we have to put in some context. I use the same scale as I did for employment. One point in time, what is it doing today? And unlike in the employment numbers where we grew half the rate of that of the U.S., we're much closer to what the U.S. and the Plains region was doing. And that's because when you're talking about some productivity, use of capital labor, we had some big shifts of that in the aerospace and some of the other sectors. We're producing a lot more with the capital goods that we have. So we do need a little bit less labor than we did in the past. So we're doing good there. However, when you look at this red line, it's showing that GDP has actually slowed and flattened out a little bit. This gets me back to this concern: is Kansas economy stagnant? Are we close to a recession within this state? And that's a concern. So instead of talking about economic cycles, let me talk about business cycles. First, agriculture and oil. Now, when you look at analysts in both agriculture and oil, they say that we had our peak, we're at our trough, and they're both growing. They're just not very optimistic right now about the next few months or this next year. But the optimism's there for longer term. They're going to start growing, especially with the global economy growing. They'll start improving, just not a lot of expectations in the recent months. You go over to manufacturing, and unfortunately, every single year I come back to you, there's been a reason why this latent potential in a manufacturing state, why manufacturing is not taking off. And this last year is actually what he was talking about, this global protectionism, this issues with trade. Go back to the cat reference. This is like putting a shock collar on a cat. They're going to give you a stink eye just by talking about it, even if they do want you to trade, make differences in our trade deals. It's just going to slow down quite a bit. All right, global conditions, the value dollar, I've talked about this several times, so I thought I should put this up here. The trade-weighted value dollar came down just a little bit. He talked about the reserve currency. This helps increase our competitiveness. And on the commodity side, you see that exactly happening. It came down, and our agriculture commodities started going up. And they went to our biggest trade partners for Kansas, and that's North America, Canada, and Mexico. Our other trade partner is Asia. So go back to that trade deals. When we tried to talk about trade and we close down stuff, on the commodity side, they're going to be very influenced by any cost. Trade deals will make an effect. The value of the dollar will affect us. Overall, the global economy is improving. I'm just not sure how much that's going to spill over to growth in the Kansas economy. We do this annual survey of businesses and across the state. They tell us their concerns, and this has been a consistent answer every single year, is U.S. global position. We have not made a lot of progress in changing and how competitive the U.S. is in the global economy. This goes back to those regulations and trade deals. Concerns at the national level, well, things shifted a little bit. One, because we added a couple categories, but we also had a change in administration. So the concerns about federal debt and monetary policy dropped down. Now, you got to keep in mind that there hasn't been any significant changes. We actually raised the debt ceiling just recently, and we're likely to raise the debt ceiling again in December. And the Republicans are going to start getting a little bit more frustrated with this. So when we get to the springtime, we can have a lot more issues unless some other policies are actually implemented, not just talked about. Another one on here is immigration. Now, although immigration is down, when you look at how people answer this, they don't actually agree on that answer. For the certain regions of the state and for certain industries, this actually goes from number 7, it goes all the way up to number 1 or number 2 as the biggest concern of what's going on. Now, there was a conservative group that just recently did a study and talked about immigration and what would happen to the Kansas economy in particular. And they said if we actually tightened up the border control but increase low-skilled and high-skilled immigration, Kansas, because of the structure of our economy, because of agriculture and manufacturing, would benefit. We would add about 51,000 jobs over a 10-year period. So when we talk about our population issue, when we talk about labor supply issue, that is a potential answer for a Kansas economy when we have a hard time attracting skilled labor and low-skilled labor to this economy. Overall, let me give you a bigger picture. I think that Kansas can grow. I don't think we're necessarily stagnant yet, but there is a hairline away when you look at output and employment really flat. I think the global economy and the national economy will have an influence on our state. We will grow a little bit, but that labor supply is what's really going to hold us back from having any more significant growth. And with that, I'm actually going to turn to our panel discussion. And I'm going to start with you, Tom, when we do talk about this. And Tom, I would like you to give us a little bit of background about your company. And then I want you to talk a bit about your perspective from your company and your industry. How do you view the economy? And feel free to disagree with both of us. I come with a much more negative outlook versus Joe being more positive. So maybe you'll balance the two of us out and come in the between. But go ahead and give us a perspective.
Okay, well, good morning, everyone. Glad to be here. I'm with Creekstone Farms. We're in Ark City, Kansas. We employ about 700 employees. We produce and deliver the world's finest Black Angus beef out of Ark City. In fact, we are the largest plant in the world that only produces Black Angus beef. We're a high-end product. That most of our products are sold in high-end retail and high-end food service throughout the world. Spend most of my time in manufacturing. I've been with Farmland in Wichita. I've been a small stint with U.S. Steel. My experience on export's been in the protein business, which is different. It is very highly volatile politics, trade relations, changing political scenes. All of a sudden, the country's open, it's closed, they've restricted, they change what cattle are available for which type of export. So you really got to stay on top of it and be flexible as you go back and forth from what's the current environment that's available to export throughout the world.
So what you're saying is changing. Do you have to add more time and labor to this to follow all these regulations?
Absolutely. Most countries, like a good example is China. China just opened for U.S. beef. They've been closed forever. They come with their own set of restrictions. So the cattle have to have a certain type and they have to be qualified to be export. And of course, there's all kinds of paperwork to export to China. And as the market comes in and matures and gets filled up, and a lot of the countries have quotas. As we fill a quota, all of a sudden, we're cut off. It might take 2 more months before we can ship any more products. So you got to stay flexible and stay current with what's going on in the world.
So what's the optimism about China or our other trade partners, Canada and Mexico?
Sure.
Is it positive? Give us a feel where you feel
Absolutely. And again, I'm going to speak to the protein side. And of course, as we've talked earlier, the China market's just mind-boggling large. I mean, there's no way we could fill any kind of penetration for their demands on protein. So I think you're going to see U.S. beef is highly valued in the world. So you're going to see a shift. We're going to export more beef, which is going to leave less in the United States. And I think you will see probably costs go up, prices.
Thank you. So, Joe, I want to come back to you. You were talking about this global protectionism. I was mentioning as well. What do you think is going to really happen with some of these trade agreements? How will it affect growth? Can you go a little bit more deeper into some of that? Because and as a backdrop, Kansas is an export state, and this is an export city. We do on the commodity side for grains, and then on the manufacturing side for machinery equipment, aerospace. We are global.
Well, I mean, as I said, I'm worried. I mean, walking away from TPP, the Trans-Pacific Partnership Agreement, I put some of the blame on the Obama administration. They could have rammed that home earlier if they were a little bit more excited about trade. So, we don't understand trade, we, the average consumer, that, the shoes we wear, the credit we use to buy shoes or food, it's all sourced globally and locally. I mean, it's a combination. So NAFTA, I mean, I hope, we kind of, does it need to be tinkered? Yeah, every president has come to office, by the way, Clinton on forward, even Bush Sr., saying like, oh, we're gonna adjust NAFTA. So we'll see where he goes with that. But the whole protectionism it's deglobalization. That's the key issue, and it's made it. And one in particular, and it's not relevant to Wichita and Kansas, but like digital protectionism. I mean, if you watch carefully what Europe is doing, and when it comes to agriculture, I mean, they're kind of really off the rails, particularly the French, when it comes to their cheese and how it's processed. But digital protectionism, right? I mean, Brussels is demanding Apple pay Ireland $14 billion, like right now. Ireland doesn't want the money because they want Apple to stay in town. So I worry about that. But Jeremy, also I want to go back to Kansas, Wichita. You're not necessarily competing against Mexico and Canada. I go through the whole country, and you're competing against Florida, Georgia, North Carolina, Tennessee, Texas. There's some very strong, focused, pro-state governments out there. Arizona's another one that are attracting the young individuals. They are attracting the foreign direct investment. They are attracting people down from, say, the Northeast into this part of the world. So I think you've got to be a little bit more flexible and go to the playbook of a North Carolina, South Carolina. Look at Ireland. That's another great example. There's 4.5 million people in Ireland. There's more sheep, yet they attract more foreign direct investment year in and year out than any other country in the world in many cases. And it's not all funny money. It's real money. So I think Wichita, Kansas, broadly speaking, you're competing against states, state tax arbitrage or incentives. That's a huge issue. I said to someone last night at dinner here locally, I said, so Amazon 2, is Wichita on the radar screen? And they kind of laughed. Not even close. So it's going to be very interesting. Amazon 2 is, their second headquarter. This is a case study on how states or cities attract great companies to come plant their businesses there. And then you attract that human capital with it. So we'll see how it plays out.
Now, Tom, let me go back to you. Maybe you can go a little bit more into some of the trade that you're doing. You ship also domestically. We talked a little bit about export. Maybe you can go a little further about your expectations there, even the domestic market.
Sure. Currently, we export about 25% of our products outside of the United States. We're seeing everything in agriculture is on cycles. So as we see cycles, peak and valley, the herd builds, the herd gets sold off, and the market adjusts accordingly. But again, we overall, even the short term, medium term, long term, is that the demand for protein is just going to continue to increase. I mean, that's not going to change. People have to eat, and in our business, beef is still kind of the number one valued protein in the marketplace. So as we are going to, I'm being very optimistic, as we see the demand increase, supply is going to have to catch up with it.
Is there a certain segment of the meats that are more premium? I mean, you've talked about some that you guys deliver, but are there certain segments of that meat that are more in demand than others that might fit the Kansas economy more or less?
Unfortunately, animals come in with equal amounts of product, so we have to sell all of them off the animal. So we have to balance it out across the world. And some of the Asian favorites that we call them on products are things that we would never consume here. So even though we're high end, we'll still send, a good example is we send livers and kidneys to Egypt. They've developed a taste for that market, and they pay the highest premium for that, even though it's a low end product. It fits with our whole balance.
It's not low end, it's just high end for a different person, right?
Exactly.
Right.
If I could interject, we got a specialty asset management group for buys farmland. And some of our farmers have told us, like, in the statistics come from the UN, the food production that we need to feed all this big middle class emerging across the world in the next, say, 10, 20, 30 years, the amount of food we need to produce is greater than it's larger than we've already produced in the history in the last 100 years. Think about that. Think of that underlying demand. And when you go to parts of the Middle East, Africa, even India and China, it's remarkable now to be obese people, right? They're eating more, per capita incomes. Maybe it's the wrong food, maybe they need more protein. But you can easily chart the protein consumption globally. It's straight up.
Well, I think that's a good question. What is the capacity of delivering more protein from this area? You want to respond back to it? If there's demand is going to continue to go, maybe Tom has a comment on the capacity first.
Good thing about Kansas, the Midwest, we have plenty of land and plenty of resources. So I don't think we're anywhere near where we could be in the future. Now, I don't know the specifics on growth.
Sure.
My opinion would be that there's plenty of growth available.
Yeah, I mean, huge upside. But, this is obviously a political football with Australia, Argentina, China, Japan as well, of course. But, the global agricultural economy is just ripe for tremendous growth if we can put the right policies in place.
So when we look at resources as in the state, natural resources, that's one of our best assets, and skilled labor and the existing infrastructure. So we have the infrastructure for delivery. It's just about fueling that with more labor and waiting for that demand to be there. So good point. So while we're still talking about the global economy, Joe, I want to go back to you and talk a little bit about Brexit. You were getting the size of that economy. Maybe you can talk a little bit more. How soft or hard will this be? And get in a little bit more of the details of the structures of this. What's going to happen with some of their trade agreements? What's going to happen to their economy?
I mean, with Brexit, it's just unprecedented that a country like the United Kingdom can just shoot themselves in the foot, both feet, by leaving the European Union, negotiating their way out. I think it was kind of knee-jerk reaction. It happened, so it's behind us. But already you can see that the consumer, the worker left in the UK is going to have a lower standard of living. Import prices are increasing. The pound has come off dramatically, although it's bounced a little bit here. So, and I do think when you're in Brussels, particularly the Germans and the French, there's a new alliance being formed there between Merkel and the new French leader, that it's not going to be a hard exit, Brexit, but it's going to be nasty. It's going to be a nasty divorce because Brussels, particularly Germany and France, they're going to make an example out of the UK so everyone else gets it, whether it's Poland, Hungary. Like, if you want to leave, it's going to be very painful. And it made sense for the UK, relatively speaking, to leave because the UK transferred more money to Brussels than Brussels sent to the UK. Well, if you're in Italy or Spain or, say, Hungary or Poland, no, the transfer is inbound, not outbound. So when Hungary threatens to leave the European Union, you got to laugh or chuckle because they would lose so much money, it'd be financially ruinous. But so the whole idea is that with the European Union, part of the confidence there is that the core is being reshaped, right? It's reemerging. That traditional German-French alliance is going to drive growth. Germany's got to lighten up, right? They love to kind of save and not spend. Merkel's in her fourth term, legacy. She's got to shore up the Mediterranean states. I think she will. She's talking the right game. But to me, I think it would go down as a tragedy. It's an economic tragedy, Brexit, what the voters voted for, because in reality, it's going to get worse before it gets better. The companies are leaving already. The next dollar invested in the UK that would have been in the UK, now it's going to Ireland, Frankfurt, France, and the game is on, and they're going to be left behind.
So that gives us some concern because we do a lot of exports, and we have a trade partner on the aerospace side because of that. So there's some concerns back there. Now, on the other side of the EU, what do you think their strength is? You're talking about Merkel's going to try to shore up some other relationships. That side's going to grow or not?
I mean, it's remarkable. We got to kind of rethink Europe in the sense that they can't manufacture, no one works, the Greeks don't pay taxes, the agricultural economies of Italy and Spain are stagnant. Not necessarily. We're seeing good life science companies emerge out of the traditional heartland of France. Good transportation companies. The German capital manufacturers are very robust globally. We're seeing a build out along the periphery in Eastern Europe. So to me, I think there's some income inequality that's building in there. I think Draghi, the European Central Bank governor, has done a great job liquefying and providing stability, financial stability. So there's a lot of strength. And remember, as I said earlier, the EU, the European Union, with or without the UK, is still one of the largest economic entities in the world, and they're wealthy, right? Wealth matters, right? It's not about 1.2 billion Indians with a per capita income of like, say, $1,500 each. It's more like a Germany with 80 million people with a per capita income of 70,000 per person. So they're wealthy, they're large, good rule of law, transparency, innovation. They produce more science and engineers, by the way, than we do, so we got to step it up. So there's a lot there in terms of business and opportunities, and I think I see growth as well.
All right, well, let me wrap up this portion of this, talking about exports and this global economy. And I hear from both of you, you're really, really bullish on what's going on. And in this case, this could be a much more optimistic outlook, and it would influence, our numbers would be a little bit more negative based on how bullish that they are in those things. So let me go back and talk about policy and regulation. Let me start the policy and regulation. And Tom, let me go to you. A company like yours, what is hindering your company when it comes to policy and taxes that is making it a little bit more difficult?
I kind of treat taxes just like any other expense. It has to be managed and controlled. As a relatively small business, we don't have lobbyists. I can't go on to Washington and try to get special rules carved out for us. So, do the best you can, stay current. The ACA came along and changed how we do all of our benefits, so you just got to stay on top of it and do the best you can as you're managing that expense with every other expense that you have. So, obviously, we're heavily regulated with the USDA, which we should be with food products. We want to make sure it's safe and wholesome, so we're continuously working with the government on that point as well. And the export side is it is so fickle. You just have to stay on top and be flexible. And we're a small company, so we'll take advantage of a market. If it matures and fills up, we'll move to the next market. We'll move to the next market as the whole world economy changes.
So Trump is in place, and one of the things is de-risk some of the regulations. Have you seen any of that materialize at USDA?
No.
Okay, but do you expect some of this to happen?
No.
All right. That doesn't. So when we go back to competitiveness, when we ask this survey every year, that means we're not changing that same question. How are we increasing our competitive nature? And one industry that's very critical to us is not really, expectations, not a lot of change in that competitiveness. Joe, let me go to you and talk a little bit about the President and the Congress's bill of tax cuts, especially the corporate tax. You mentioned it briefly. Any other thoughts that you want to share on that?
I mean, I just want to, I say this a lot to investors, just because corporations are going to have more money in their pocket doesn't mean they're going to go out and hire and invest tomorrow. You still have to have, states like Kansas, create the environment for them to put that dollar down. So, but we are competitive, and what I don't like, our corporate tax structure, it's so burdensome that we do create financial engineering that has, Ireland or Cayman Islands or Caribbean nations having these huge flows. It creates disincentives. It creates a lack of transparency. So anything that can be more transparent about corporate taxes globally is going to be a positive. And I do think, as Tom said, I mean, when a business can do what they want with their money after they pay a reasonable amount of taxes, they should be allowed to do that. Like you and I, we pay taxes, but there's a point where okay, stop, get out of my pocket, and let me decide who to give the money to or how we spend it. And so I think it's going to be a positive. And I think we're going to get it in the first quarter of next year.
Okay. Well, let me go to you, Tom, for a little bit of a wrap-up. Can you give us some things that you think are challenges and benefits from the global economy from companies in the middle of the country? I mean, you're not next to a port.
No, that's probably our biggest challenge is that logistically we're very challenged. We're exporting both on the West Coast and the East Coast, so we rely heavily on trucks to get products to the coast and then onto ships. And the challenge is really for us is that there's no backhauls. There's nothing coming back here that we can match up, so our freight rates are very high. So that's probably the biggest challenge. And then in weather comes into play, especially as the winter comes along. As far as benefits, obviously, we have great workers in the Midwest. We talked about the natural resources. They're heavily abundant. And I would say benefit for us being in a small town is we have a very low cost of living.
So you have some lower cost of living, you have access to labor, but because of physical location, you're paying higher freight charges, not only because we don't probably producing as much going through here, but also the freights itself. You're going one way, we're not getting it the return.
Correct.
So there are some areas where this state could actually think about some of those policies and improving some of that freight load trade, which could be helpful not just to you, but actually many other of our export companies that way. All right, thank you very much, and I'm going to turn it over to Deb.